Welcome everybody to Game Plan Sunday. Today's January Sunday, the 27th, and we're off with another session here. We had a pretty decent week last week in the markets. We're able to come through with some pretty good plays. It was kind of choppy, it was a short week. We had the holidays. We had Martin Luther King Day on Monday, and the markets, was acting up a little bit, of course. Tuesday was a down session. We got some upbeat into the markets towards the end of the week, and then a little chop. So overall, it was pretty good. Much better direction in the markets as far as them, continue to pull up in the uptrend, pull up in the downtrend. So it's counter trending here, as we know the big trend is kind of going down, and the markets is moving its way up into key levels of resistance. And we'll take a look at some of those things here in a second. But there was last Game Plan Sunday, or last, all of the members, you guys already got the newsletters and everything. We talked about the World Economic Forum that was this past week, which is major. Anybody catch the World Economic Forum in Davos? Did any of y'all see that? Catch any of the sessions? I don't know if you guys caught the sessions, but it's a lot of information, a lot of information. So if you caught some of it, then that's great. The World Economic Forum, it's a major, big deal. As y'all know, money makes this world go round. The world that we live in, everything is controlled by the money. So all the power players, or most of the power players, were at the World Economic Forum last week, and it was interesting. I'll tell you guys about some of the things that I did see. I didn't catch everything, but it was interesting to see all these world economic leaders, hedge fund managers, mutual funds, banks, head of banks, all the top dogs. One thing that I was hearing that was kind of consistent is that they were actually, I don't know if, you saw it, Mia? Good. Well, one of the things that I noticed from the WEF in Davos is that I heard consistently was a push for globalization, okay? Globalization, and for those, you normally hear the terms globalization, or you hear nationalism. It's kind of like this beef thing, and it seemed as if the world leaders want to get everybody on board with globalization across the world. So it has, the world, because of the internet, we're all, interwoven together. We're all connected in some kind of way, basically. And we're talking about economies at the same time. Because of all these, working parts, we're all interwoven together in some form of fashion. And so there was a strong push, a strong outcry, I would say, at the World Economic Forum about globalization, basically. And as you guys know, in this term, this political term, it's a big push for nationalism. It's and it's not just in America. If you guys got to catch the world markets over in Europe, it's a big thing where nationalism is the thing, because globalization, and I'm gonna put it like this: as a capitalist, you can't really see, not that you can't, but you have to get out of the mind frame of thinking right versus wrong. Just think about temperatures on thermostats, okay? Think about things turn up, things turn down. It's not like binary. It's not like yes, no, right, wrong. So when the economic tides turn, when things, the economic, the economy, as things maneuver through its normal cycle, you have, it turns up, it turns down certain notches. And so through globalization, it helps some people, but it hurts some people at the same time. And so then you get a push for nationalism, which basically is, hey, let's worry about our country. Let's not worry about other people's countries. Let's take care of our people first. It's about, whatever your crew is, and, our crew first before anybody else. And so at the World Economic Forum, they basically was painting the picture that nationalism is dangerous, and that, they want everybody to get on board with globalization. They did paint a picture of some of the positive things that came from globalization. And, it's just interesting. I don't know how that's going to play out, but that's, if I can give y'all my summary of what I heard overall at the World Economic Forum, that's basically what I was hearing. So there's going to be a strong push for globalization. And there's another thing that's interesting too, is because we're in a, in this political climate that we're in, this is the year of the election. So 2020 is coming up, and we have, in America, we got the Republicans and Democrats are back in power with the control of the House. And so it's going to be interesting. Everybody's putting together the candidates, and you see commercials and, debates and everything is going to be sparring up. And there's going to be some sentiment about, the wealth gap. So wealth gap is a major thing. And through my studies, I've actually come to find that all these things are normal part of the economic cycle. So the economy has these cycles that it goes through, up and down. And so now that we're in a data-driven society, we can go back, we can collect this information, and we can actually look at it, like your bird eye view, and see the outcome. And so that's what all of these financial analysts and economists is what they do. They take a look at the data, and they can actually derive, deduce these outcomes basically. So I don't know if you guys caught the last blog that we had pushed out called the year 2019, the year that the world slows. I'll pull it up here in a second. You guys didn't catch that. Yeah, so basically, this right here is pretty powerful, man. If you guys make sure you check the blog out on the website, wallstreetjackboys.com/blog. And, all of our past, things are here. So I try to drop some nice jewels in there. It has my own touch, okay? So I'm not a nerd. I don't put it in a nerd way. I'm a street guy, right? So I make it so you guys can really understand it. But, when you get into looking at the outlook of the world, what's coming forth, all the major powers, they already know what's to come. Okay. How do they know what's to come? Because we got the data. Okay. And at the forum, there was the IMF, the head of the IMF. She was there, and her colleagues there. They did a presentation about what they have, come up with as far as data. It was interesting because last year, back in October, we did catch whiff of, them talking about the economy. The world economy is going to slow down. Okay. But this was interesting. At Davos, they were saying that their numbers, that they had to push their numbers further down. So they adjusted their numbers. They was already projecting for the economy, the world economy. I'm talking about everybody basically. Except for the U.S. The U.S. is in a very special position. We'll talk about that. But if you guys read the article, then you'll get all that sweet, good, juicy information for free. So, put that out for you guys to check it out. And but basically, economic slowdown. And again, these are like normal things as far as economic cycles. We have these ups and downs, just like everything else in life. And this is just the normal part of the cycle where we are now, where we're seeing some slowdown. And the Feds, which, you guys know about the Feds now, but the Feds play a major role in controlling this thing, and it's interesting. So we always keep, in the markets, we keep our eyes and ears to the Feds. What are the Feds saying? Because the markets react towards what the Feds say. So the Feds talking spooky, your stocks sell off. Don't come to me like, hey man, what happened to the stock? Well, the Feds talk, and the Feds say something negative, that's what happened. Or if the Feds say something positive, then that's what happened, right? So they are that powerful, and they use these they call it monetary policy, interest rates, and they can control, the economy basically. And so, which that comes from the banks and everything else. And so, anyway, it's a long story to go through that. I may have to do a class or something for you guys on it, but it's just the economic cycle. Okay. They are, and so basically the head of IMF and the colleagues there, they did publish a report as well. I got links on the blog if you guys are, in here and you can check some of the things out. You can see, all the information, the research that I conducted from this. But basically, they're saying that, hey, they're projecting even further slowdown. Okay, so they adjusted from the October numbers that they ran, and in January they're like, okay, well, we're expecting further, slowdown. So that's interesting, because if you're somebody who, this is what, why it's important. If you're somebody who's into the mind frame of buy and hold stocks, I'm just buying and holding, and I'm just going to be rich because I'm buying and holding. That is not the proper that is not the ideal way to approach a slowdown in the economy, okay? Because all these things trickle down to the corporations, to the people, to the economy, right? And so you had to, this is why we advocate trading, because trading is, is something that you can, bend in the wind. So anyway, those things are very interesting. And like I said, you guys make sure you check it out. I put it here as the world slows. We talked about it, in the prior sessions about, the outlook as the world slows. So anyway, without confusion there, the world slows down doesn't mean it's not going to be any growth or any economic expansion. It just means that the rates that we've been enjoying, forget about those days. Those days are over. It's not going to be as high return like 2017 and 18. If y'all was in the stock market, you saw it was crazy. It was crazy. The boom was like bing, So those days are over. It's going to be challenging getting through this situation. So, which brings me to this point. I'm going to just bring up this chart here to show you guys something. I don't know if you noticed or not, but we'll talk about it a little bit, because we were just talking about the Feds here. And something interesting that, while we're talking about the Feds and how they control everything with their regulations, if you take a look at these charts here, let me pull out my pen here. All right, you see these gray lines? I'm marking them with the letter R. Okay, this represents recessions. Okay, so anywhere you see these gray lines, these were where we had recessions. Okay, all right, and you can see the dates that follow. And this is built right into our Thinkorswim platform. So I don't know if you guys know it or not, but you can actually research this stuff yourself. Okay. And so this is important because, again, as we progress through this thing, you guys are going to be hearing terms. You're going to be seeing things across the news. You're going to be hearing things about the Fed's fund rate. You're going to be hearing about interest rates, inflation and all this other stuff. And so I just want to just give you guys a brief introductory on, where you can see this stuff and like why it matters. I don't think some people can really quite understand why it matters. Okay. So anyway, so this is the Fed's interest rates. Okay. And if you notice where it spikes, you get that recession. After it rises, you see how it's the patterns are pretty much the same. It's like, okay, anytime you get a spike, in the interest rates, then you get that that recession comes. And I'm bringing this up because there were someone who sent questions. They wanted to know about the yield curve. We talked about that also a little bit, and it's basically one of the lead indicators to let us know that a recession is coming. So you guys are going to hear about yield curves often this year, as depending on how everything materialized. And we will see how that works. But this is what's basically happened. Okay, the Feds drop interest rates, the economy goes up. The Feds raise interest rates, the economy goes down. So the Feds use this tool to cool and heat the economy in an attempt to create balance. And the tools that they use are basically lag indicators. And by the time they go to adjust, it's too late. By the time things roll in, the poop hit the fan, and now you get into a recession. Okay. So I'm going to show you guys this here real quick, and then we'll get to, our stock market assessments and what we're looking at for the week. But basically, if you see the 2008 time frame to 2016, okay. Remember I told you the Feds keep the rates low, the economy rises because the cost of borrowing is cheapest, and that's their way of encouraging businesses and corporations, to lend money, spread money, and that's a lot of, businesses are built off of debt. So from the banks and everything. So anyway, you saw here, this is the Obama's presidency. Okay, nothing personal against Obama. It's just the data. Okay. So with the rate hikes going up here, that peak, the Feds dropped the rates down to zero. Okay. Boom. They dropped it to zero. And so you get this economic expansion. It's okay, Keith. You'll get the replay as well. So anyway, with the rates, the Fed's reducing the rates down to zero. Okay, the cost of doing business was gravy. It was stupid, crazy, dumb. Why would you not borrow money to run your business, right? Corporations did this crazy, okay? Now, if you notice, anytime they did this in the past, right, look at this, like this time in the past, they did it this time in the past. You know, there are shorter terms that they kept the interest rates low, okay? They're not even at zero, right? But they, you know, that's what they use the tool to push it down to help the economy out. Okay. And then they also do another thing, which they buy up all these bonds and they hold a bunch of, securities in the markets, basically to help the markets out. So anyway, so under the Obama years, you got the zero interest rates here, which is supposed to help the economy get back up. And that's what we've seen. You've seen this economic expansion. It's because the Feds reduced the interest rates to zero. But notice how long they actually did it. You see? That's the longest time I've ever seen that. That's the only time you can even, show this on the charts where you get this economic expansion. Now, Trump is in office now, so it's a different presidency. But if you see the interest rates risen, again, remember this is 8 years, okay? So in 4 years, it's not even quite 4 yet. We're up here to 2.5. Now they got a target of 3. Okay, that's where they want the rates to go up to. Okay, and this is a psychological level. You just slide it all the way across. Okay, if you notice that zone, recession. Okay. So you guys hear just some talk about there's a possible recession. Now, nobody knows there's going to be a recession, but we use this indicator to let us see in the future because it lags basically. We can see it come, the recession comes afterwards, okay? So you see the spike in the interest rates. The spike in the interest rates were here, the recession came afterwards, all right? The spike came here, the recession came afterwards. So the recession is a little late, but this is our lead indicator. So we know once we see that, expect a recession. Doesn't mean that it's going to happen 100% of the time, but this is probably the most accurate indicator for a recession. So hope you guys see that. And so in this economy, we're at another point where we're spiking now. We're getting up to a spike. And this has been a whole beef with, Wall Street and Feds, Trump and everybody. You'll see them talking about it. So hopefully that gave you guys some insights. When you hear these things, now you know what they're talking about. Remember, zero rates under Obama's presidency, nothing to do with him. It's just the Feds. This is what the Feds do to control the economy. Okay, zero rates. Trump get in office, boom, they bring it up. This impacts the cost of doing business, and it's supposed to discourage banks from lending and, to corporations and businesses, basically. That's how they control the economy. So we have these cycles. That's what the cycles are about, okay? The cycles, economic cycles. That's pretty much what it's about, It's the Feds, And so they try to cool this thing off. So anyway, hope you guys find value in that. So I don't think that we're going to see a recession in 2019, but 2020, it really depends. Okay. So we don't know. We just know that we're at a higher risk of entering into a recession. Okay. Versus down here, no risks of recession, right? Now we're here. It's like, okay, this could be coming around the corner. So that's something I want you guys to just keep in mind. These terms, know what's up ahead of us and what may possibly come. So, and then you guys know what to do with that. Make sure you're saving, not spending crazy because this thing hit the fan. You saw what happened back here, all right? Or if you, and this, you guys are around these times, so you've seen what happened with these. We don't want that to happen again, right? And so for those people that's just buying and holding, and you're not trading, you don't know how to trade, you're gonna be a sitting duck, okay? And so that's why it's important that you guys get this information, learn how to trade, so that you can maneuver through all these ups and downs, okay? So anyway, with that being said, we'll make our transition over to the markets. All right. So this is where we are. for the week. And past Game Plan Sundays, we talked about these key levels of resistance with our signal, our indicator, which is the moving average. So all premium members, you should have this. It's free in the courses. But these lines here, we got those as key level of resistance. So once the market's printed its floor here, end of January, coming, and we're end of December. So now we're in January. The market is off to a really, really good start. You know, you can say this is pretty good, you know, for the start of the year. So interesting, because I've been trading carefully. You guys know we have to tread careful in these counter trend setups, because again, the counter trend setup is basically, this is the trend downwards, but as it comes up, it hits ceilings and get rejected, right? So it gets rejected, gets pushed down, and say, hey, we're gonna make another try at it, and then it gets rejected again. Then it comes down, and then it works its way back up. So that was the first level, all right? First level was here, all right? And then I was like, okay, be careful, okay? Then the next week, it popped through. I was like, oh, that's interesting. So it hit this level. It's like, okay, you know, just be careful. Once we hit these tops, you just got to be careful. And then we push past that to this level, right? So again, these are our ceilings, all right? These are invisible unless you got the indicators to show you. These things do work like clockwork, and all you guys know this stuff works. And so anyway, we're here at our 100 moving average. Now there's another key level up. Again, this is, you know, the strongest point. This is the 200. So the question for the week is, will the markets push past this level, or will it consolidate and get rejected? Okay. Now, if it push past, then we have targets up ahead, right? We got our next target, which is the 2741, right? So around 2740, that's a target. That's if the markets push past it. But once we get up against resistance, you know, the thing is to see how it's going to react towards that line, okay? And so then, you know, you'll be able to make quality decisions, okay? With that being said, we have a major earnings week this week. So earnings is going to be popping, on and popping. Super Bowl coming up. Was it this Sunday coming up? But this is going to be a Super Bowl week for the markets too. We got earnings coming up. Let's see, we got Caterpillar starting off on Monday. We got Tuesday, we got eBay. We got Verizon. We have Pfizer, Amgen, and Apple. Apple is going to be big boy, blockbuster, okay? That's Tuesday. I think, yeah, Tuesday. So then Wednesday, we got Alibaba. We got AT&T, which is probably going to play off of Verizon. We got ADP. We got Boeing. We got Facebook. Facebook, that's, you know, blockbuster. We got McDonald's, blockbuster. We got Tesla. We got Microsoft, PayPal, all the big boys. Wednesday, all right? And then Thursday, you got Amazon, MasterCard, Raytheon, General Electric. Friday, we got Exxon, Honeywell, Chevron, Dominion Energy, okay? So those are pretty much the highlights for this week. Now earnings, you know, we get very big swings up and down, and the earnings is basically the company's got to report to Wall Street, let them know, hey, this is what we did for the past quarter. We hit our expected numbers, or we missed our expected numbers. And based off of that, you get a violent event, you know, whether they pop up or they pop down, you know, is dangerous. So you guys, you know, just be careful if you're holding any positions this week, because, you know, a lot of those things will impact your position. That can be positive or negative. Now, if you plan on playing any of these stocks, yeah, definitely consider not holding them through earnings. Okay, it's binary, and the markets, you know, can spit you out if one little thing is wrong. You can beat earnings, beat on revenue, and get crushed still at the same time. So just keep that in mind. More treachery along the way, but it's gonna be action packed though. Okay, so starting this year off has been a little interesting because of the downpour from December. You see, from back here with the sell-off that was major, and even though we're coming up, we haven't established any sector leaders. You know, you can go back previous times. We normally play our strength within the strength. We can see which sector is leading, and then we allocate our dollars into the sectors that's leading. So it's say, hey, tech is popping right now. Okay, good. I know the tech stocks. I'm gonna go play tech stocks. Or hey, real estate is popping, so let's go into real estate. Or hey, you know, consumer staples is popping. Let's get into consumer staple stocks. We haven't established leadership yet. They've all been doing pretty good. But again, most of them are pushing up against this resistance the same way it was last week and the week before. So I'm gonna have to tell you the same warning. Okay, be careful. You know, this 100 is stronger than these other ones, but the 200 is going to be the strongest one. Don't know. I doubt if we push past the 200. Now we may make it up to the 200. I have my doubts, but again, you know, I could be wrong. Anybody can be wrong. I'm just telling you based off my experience and what we see and the data that we have, and you know, that's how we're gonna make our decisions. So if we are to push up, then you all know our signature setup is the squeeze setup, right? And all you guys that are members should have this scanner over here. Let me just switch the colors. You should have your scanner for just the Wall Street Jet Boys scan list, right? That's a squeeze list. So you see all these names down here. Those are, you know, good candidates for what we should be looking towards allocating dollars in the markets for the week to make some money, generate some income. All right. So we'll just take a look at just a few of the names. Okay. And this one here is data, which is Tableau, which is pretty cool. So Tableau here showed up on our scanner, and you guys can just, you know, quickly take a look at it, and you can tell that it's in a clear uptrend. Okay, uptrend. So we want to play this to the upside. All right. We do have our squeeze and some other bullish indicators. So we have our trend coming up. We have our bullish squeeze here. We have our stochastics and everything else pointing to the upside. Okay. And then we have some targets up ahead. And so let's see. These are some minor targets here because I put them off the closest swing, which is from this point to that point, up ahead. But the big swing is the one that I'm actually focusing on. So I'd like to see this with a up, the top out with the ceiling here about 137. Okay. So that would be my upside target on this one here. And all of that means, you know, for you guys that don't know, is that basically it's going to go up. And when they get to this level here, then you need to sell out. You need to take your money and get out of there. Can it go past that level? Yes, it can, but it might not. And we want to capture profits before we lose those profits. Okay. Now the thing, you know, again, we got earnings, you know, coming up there as well. So again, my projection is from here to here. That's probably around earnings time. And then earnings time, whether it, you know, hit or miss, it can go down or it may hit the second target. My advice is take profits often, hit this first target, get up out of there. Okay. All right. What else we got? Sherwin. This is another squeeze setup, but I'm not really interested in it. And the reason why is just because it's trading under its averages here. So again, these key levels of resistance there, I mean, it still may pop up. Okay. But it does have some key levels of resistance up ahead before that. So I'm not interested in that move. Take two. This is the video game one. Now, this is one that we had on the list, I think about 2-3 weeks ago, And of course, it had the squeeze set up in here, and the squeeze never fired off. And I hate stocks when they have long squeezes that don't make no noise, you know. So when they had these long squeezes, you know, I'm really, really not feeling those. Okay, so it had a squeeze, it pushed up, it hit that target, and we seem to get rejected ever since. Now it came back up to that target again. That's 2 rejections. I got a sell trigger. It says sell. Okay, and so we do have earnings up ahead. This one looks like to the downside, and that's like a double top setup. So this is a double top pattern. You guys with the if you got the books, you know, all the members got the books, you know these setups, you can identify them quickly. But you know, again, we're just following our technicals. Now for the immediate terms, coming back up a little bit, but the bigger trend is going down. So again, you know, if you're looking for some bearish exposure, I would take a look at TTWO to the downside for this week here. And another interesting thing is, before I get into this one here, is interesting. So this Wheaton Precious Metals, don't really know too much about it. If you guys do some research on it, let me know about it. But the thing that I find interested in this one, it does have a squeeze setup. This has a pennant play. You know, you guys got the books, you got the setups. The setup here is, you know, it's like a flag kind of, okay? And so basically what that flag's supposed to do, it's supposed to go up, okay? After that, you know, that pattern has played. So we actually have a pattern there, and we have our squeezes in here. We do have a buy trigger there. Now, the thing that I find interested in this one here is, hold on, the options on this are actually pretty, the options on here are pretty cheap, you know, and I think that's interesting that the options are pretty cheap. If you're looking at the Delta 70s, let me actually get us some different ink here so we can actually read this good. If we're looking at the Delta 70s, these things are only going for $71. You see what I'm saying? So that's dirt cheap for a call, you know. Now it's only got 1 point, you know, priced in, but you know, this 71 cents can turn into $71 turn into $118. I'll take that any day, right? So I can get that, you know, that move up by that 1 point, then that's good, right? Anyway, I thought that was interesting because real quick. Oh no, let me see if I can continue. All right, so the chart's acting up. All right, so I thought that was interesting because gold was up for play. And taking a look at gold, the thing that's interesting about gold, we pointed out, I think 2 weeks ago, once they hit this ceiling, and y'all see how it behaves up against this ceiling like clockwork, right? Again, we just see it move up and then it move right into our signals, and then it just hovers there. That's what we call chopping sideways. And so it chops sideways, and then it looks like it was going to go down, but then it gets bounced back up, and we see that it's popping through that resistance. That's interesting, okay? There is a bullish squeeze that's forming. Okay, it's only 4 days into the squeeze, and the trend is starting to turn up. Okay, but if this squeeze fires long, so again, we do have a trigger to buy, and then we did clear resistance, and we may print the 13. That's about 13.26, 28. Okay, so about that level, print to the upside, and that's gold. And the thing is that if gold pops, what's supposed to go down? If y'all see gold popping, what plays the opposite direction of gold? Anybody know? That's right. That's right. That's right. Thanks, Mark, Ashley. So normally gold plays opposite of stocks. Gold is a safe haven. So when people say stocks is risk, gold is safe. So you got to risk to make money. But when the environment gets too risky, people bail on stocks and they buy gold. So when they buy gold, not just regular people, we're talking about, the big boys, they make the markets move. So they start putting their money in gold. See gold go up, you see stocks to go down. So that's interesting that we have a squeeze forming on gold. And the stock ticker that I was just showing you guys, that WPM that we were just looking at over here, is a precious metals stock, and it's also in a squeeze. So that's a squeeze stock within a squeeze, right? Squeeze, this little squeeze is inside here, all right? And so that's interesting. If that goes north, stocks go down. So you can kind of play this as a hedge. So like people losing money, you can be making money because you play the right thing. You play the right asset class, which would be gold, Anyway, I just find that interesting. So we'll keep our eyes on this development coming through the week. Okay. And I pretty much covered a lot of good ground here. I'll take a look at one more thing from last week, because another thing that we played out last week was we did come through with utilities last week, and this was another flight to safety. This was another hedge type play. Again, equities go up, utilities play, counter for the most part. This is a flight to safety sector here. And the thing is that our Fibonacci caught the tops of this. So yeah, we had the squeeze and we had everything else going up. When we saw it hit that top, and then, already aim fire did print an aim here, as if, you may consider getting out. And so hopefully if you guys play this, that you actually captured profits. If you're still in here, let me go on an intraday. Like today. All right, so yeah, if you're looking on the intraday here, if you guys are still in this particular stock, if you didn't capture your profits when it hit our first target there, okay, so when it came up, hit that target, that should have been the key to get out. If you're still holding that, then I wouldn't panic. That's still fine because it's coming back to the mean here. And again, I would anticipate that this can come back up, test this level again, pop even higher. If what we're seeing in gold develops the way that, we anticipate, then this should go up also at the same time. So if you're still holding on this, I wouldn't, panic on it. If it breaks beneath, this level, then, scratch it and, take your losses or whatever wins you may have. But just use this as a floor, even if it comes back down here, I would still hold it. If it breaks, then get rid of it. If it holds, good, then it probably come back up this way. If the markets, spill over, then you see flights to safety, you see gold and utilities. All right. So that's, what I got for you guys this week. I'll take a look at a couple of names or answer any questions you guys may have for me, and then we'll wrap up tonight. All right. You guys get ready for the Super Bowl? Who y'all got winning the Super Bowl? You said it was the Saints. That's out the door now, Mia. The 10-year-old. The home the Rams. I see you, Mitch. What's up, man? What's up, Clinton? How you guys doing? Demeter, Hannah, good to see you guys. pats have won enough. Hey, man, that's a strong legacy, man. Strong legacy. It's cyclical, though. You know, just like everything else in the market. You have your points are going up, points are going down. You know, the Patriots is kind of like that 2017 rally that we had in the markets, man. It's like super crazy. Oh yeah. Um. So, no time. So you don't watch no sports. Gotta watch the money, man. Louisiana don't care about the Super Bowl. Cool. Yeah, man. And you know, this was interesting, man. I pulled this up here too, and like, this is interesting. I posted, was it, I think last week or so on my Facebook page, this chart of Apple. It was, I thought it was very interesting. Let me see here. I'm gonna show you guys something real quick. And now Apple, they're coming up for their earnings, and Apple has suffered quite a huge amount of capital, right? And so anyway, I posted on Facebook. I was telling people, hey, you know, people want to know when I bought Apple at like $90 a share. You know, it was you know, what did I see and blah, blah, blah. And I was like, well, hey, there's another buying opportunity in Apple that may be presenting itself. And I'm going to show you guys something real quick. And this is a weekly chart. And for those who don't quite understand the importance of why you should learn how to trade versus somebody who say, hey, I don't want to learn how to trade. I just want to buy some company and just hold it, and then it's going to go to the moon, right? Like a lot of people that jumped into Bitcoin, right? It's important that you guys learn this stuff, okay? It's a skill. It's just not, you know, it's a skill that you got to learn. But the thing is, you could take the skill to the grave with you, okay? And it does cost a college tuition, putting you in massive amounts of debt. Our course is only $297, I believe. So, but it's a one-time fee. You have a lifetime access, and you get not just the book smarts, but you get the wisdom at the same time. Anyway, for those who are into buying and holding, I just want to show you this drop in Apple. Okay, and this is 91 days, which is 3 months, and that's 91 points that Apple dropped. Okay, now I want to show you what it took for Apple to get here, to get to that point. We just put it about, let's say 91 points right here. This is close enough, all right? So you all know 365 days in a year. So it's 462 days for Apple to gain 91 points, all right? You can see that. That's about a year and a quarter, okay? So if you were an investor and you say, hey, I caught a signal from Wall Street Jet Boys and I bought it here. Okay, cool. You bought it and you held it all the way to the top. All right. This is buying and holding. Okay. You bought it and held it to the top for a year and a quarter. So you did the right thing. You held through all this crap here, and then it ran up and hit its target. Okay. This was the point to sell. Okay. This is the point to capture profits. Okay. But if you were the person who didn't know how to trade, you wouldn't have saw the signals to capture profits. So, okay, so maybe you didn't catch it at the perfect top, which that's fine, but you had one chance here. You had two chances here. You had three chances there to get out. Now, if you bought it here, you're probably breaking even. So that's over a year and lots of loss of money, okay? Unnecessarily losing money, all right? Trading, we know when to get in, we know when to get out, we know when to get back in. So that's one of the values of what you get when you learn how to trade. You learn how to, you know, chart the stocks and everything. These are the things that we teach at Wall Street Jack Boys. Okay, so this is, you know, high value skill set. All right, this is not a game. All right, but anyway, you had these signals, and I just posted it there that, hey, we're at a, you know, position to re-enter into Apple. Okay, how do I know that? I mean, I'm just looking at the charts. That's it. The charts are saying, hey, we hit a floor. This is a key floor, not just any floor. It broke all the rest of the floors. Now this is a major floor. We'll see how it behaves towards this floor. Okay, so with that being said, I'll take you guys into the daily chart. All right, so boom, there we go on the daily. We see that print at the bottom, the floor. Caught the floor here. There's a buy trigger here. And you see the shift is, you know, the shift is coming here. So from this floor up against that resistance level, and we see it pop above that resistance level. Now it's sitting on top of that resistance level, and then it comes up. And so it looks as if it's going to move upwards, right? So we got earnings coming up this week, and that was on Wednesday, I believe. Tuesday or Wednesday, their earnings. Let me see, Tuesday. So anyway, so Tuesday earnings are coming out. I'm definitely going to be keeping my eyes on Apple to see how they perform. It's going to be interesting. They are projecting, you know, some issues up ahead with slowdown and things like that. But Apple company is ran very, very efficient. I'm sure they have lots of free capital. You know, we'll see how it do. Wall Street, sometimes they, you know, sometimes Wall Street will mess up your stock because they don't want to buy it up here. All right. They say, man, I love Apple, but it's too expensive. And then you get it wrecked and say, hey, I'm more comfortable with buying Apple here. All right. So sometimes we get that in the markets where you have a great company that gets murked off because the markets want to buy it at a cheaper price, at a discount price. So that's basically what I did when I bought Apple back at like $91 a share. I was just buy a great company at a discounted rate. We see that people are willing to spend $230 something for Apple. So you gotta, you know, you already have insight that, hey, this stock is worth that because people are willing to buy it. They bought it here, right? So if I can get it here, this, you know, this is a discounted rate basically. Now, could Apple puke from earnings? Yeah, Apple could compute from there. So interesting thing would to be to you know, if you can wait until earnings, if you're not already in there, to see how they perform at earnings. If earnings make it puke some more, good. That means you can get it at a cheaper rate if it does. But it's still a great company overall. So anyway, I hope you guys find value in that lesson there. This is their quarter fourth, right? Yeah. So this is fourth quarter earnings. Everybody knows it's January. They're reporting fourth quarter sales and revenue. So like, it's going to be an action-packed dynamite week. All of the big boys doing their thing this week. If we see any weaknesses, forget about it. But really, with all the turbulence across the world, economic slowdown, we got, you know, Brexit, we got China. I don't know if y'all saw in the report that I published, talking about China slowdown. So y'all don't understand. China pretty much runs a lot across the world. A lot of countries are in debt to China. This is crazy. But China's economic forecast is slowing down, and a lot of sentiment that's basically saying that it's probably worse than what they're actually, you know, projecting with the China slowdown. And China, you know, wrecked, and pretty much everything else over there wrecked. The U.S. is in a great position. So in the article from the world, as the world slows, that's on the website that I was showing you guys, you know, we talk about some of that, where I tell you guys basically the U.S. is in a position to weather any storm. Basically, China's more than likely going to have to cave into the trade deal because they just can't afford the economic pressure. All right, and so here we go right here, bold letters. All right, they're probably gonna have to cave in. Well, they should go ahead and make a deal because it's weighing on their economy pretty bad. So U.S. has the upper hand in the whole situation basically, and a lot of countries, some countries are embracing this thing, already preparing for it, moving their operations from China, and they can get cheaper labor out in Mexico, Venezuela, some South American country basically. It's like, hey, China is going through a storm right now basically. So keep your eyes and ears to the streets, and bring everything that you learn to the squad so we can bring it all together, meeting other minds, and like how we're doing right now, and game plan, see what we can do to move some money in the markets. But with that being said, go ahead and end the session here, but I appreciate everybody for showing up. Make sure you guys come back. Well, hold on, we might not do one next week because it's the Super Bowl, and I don't want to mess with nobody's schedule. Super Bowl is like, holy for a lot of people. So I think we may bypass next week's Game Plan Sunday. Anything that's major, I announce it to you guys, let you know, and then we'll resume the week after the Super Bowl to our normal sessions. Anybody got any questions? Make sure y'all hit us up. Make sure you get the gear. Wall Street Jack Boys represent. Y'all see how we do. Everything is on the website, wallstreetjackboys.com. Make sure you register. And next week, man, not next week, but the week after the Super Bowl, make sure you bring a friend. Bring a friend so they can see, what is it like to be a trader, and just to get the real deal on what's going on and get this wisdom, man. Feel me? But with that being said, we wrap up tonight, man. Peace.